Welcome to today's podcast summary episode, where we'll be discussing the classic investment book A Random Walk Down Wall Street by Burton Malkiel. First published in 1973 and now in its 12th edition, this book has become a staple for anyone interested in investing and the stock market. We'll cover the main lessons from the book and what makes it so relevant today. Lesson 1: The Efficient Market Hypothesis. The book is based on the idea that markets are efficient, meaning that stock prices reflect all available information at any given time. According to this hypothesis, it's impossible to consistently outperform the market by picking individual stocks or timing the market. This lesson is important because it challenges the notion that there are hidden secrets or insider knowledge that can give investors an edge. Lesson 2: Diversification is key. Diversified portfolio of stocks and bonds to minimize risk and maximize returns over the long term. By investing in a range of assets, investors can spread out their risk and avoid putting all their eggs in one basket. This lesson is especially relevant today as we've seen how quickly a single company or industry can experience volatility. Lesson 3: Cost matters. It is argued that high fees and commissions can eat away at investment returns over time. He suggests using low-cost index funds and exchange-traded funds instead of actively managed funds that charge higher fees. This lesson is crucial for investors to keep in mind, as fees can have a significant impact on their overall returns. Lesson 4: Ignore market forecasts. Malkiel advises against trying to predict the future direction of the market, as it's impossible to consistently make accurate forecasts. Instead, he suggests focusing on a long-term investment strategy based on personal financial goals and risk tolerance. This lesson is important because it emphasizes the dangers of trying to time the market and the benefits of taking a disciplined, long-term approach to investing. Lesson 5: Behavioral biases can hurt performance. Various behavioral biases that can lead investors to make irrational decisions. These include overconfidence, herding behavior, and the tendency to chase after past performance. By understanding these biases, investors can avoid common pitfalls and make more informed decisions. This lesson is especially relevant in today's age of social media and the 24-hour news cycle, which can contribute to herd behavior and emotional decision-making. Lesson 6: Stick to your plan. The importance of sticking to a disciplined investment plan, even during periods of market volatility. By avoiding emotional reactions to short-term market movements, investors can avoid making costly mistakes and stay focused on their long-term goals. This lesson is important because it highlights the importance of patience and discipline in successful investing. Lesson 7: Ignore market timing strategies. Market timing strategies, such as trying to buy low and sell high, are unlikely to be successful over the long term. Instead, he suggests focusing on a diversified portfolio of low-cost index funds and holding on to them for the long haul. It's important because it emphasizes the dangers of trying to time the market and the benefits of a buy-and-hold strategy. Lesson 8: Take advantage of tax-efficient investing. Taking advantage of tax-efficient investment strategies, such as investing in tax-deferred retirement accounts and considering tax implications when rebalancing a portfolio. By minimizing taxes, investors can maximize their returns over the long term. It highlights the importance of considering tax implications in investment decisions. In today's fast-paced, constantly evolving investment landscape, these lessons are more relevant than ever. As the pandemic has shown, unexpected events can have a significant impact on the stock market and individual companies. By taking a disciplined, long-term approach to investing, investors can weather these storms and come out ahead over the long run. Thanks for tuning into today's episode. If you enjoyed this podcast, be sure to subscribe and leave a review. And as always, happy reading.